Thank you very much for having me here today. My name is Todd McDonald. I'll be spending the next 20 minutes with you to talk about payments, money, assets, and a potential future state for not just financial markets, but for how people interact with them. So we'll be spending some time starting with where we are today with payments and what's happening with some of the things that we're working on here at R3 with bringing payments onto distributed ledgers. I also wanted to spend a little time talking about money itself and some of the work that we're doing with central banks, but also more broadly. And really tying it all together is how these new forms of money and new forms of digital assets are working together to potentially bring forward a net new open financial system. The jury is still out, but I think that there's some very interesting, compelling, exciting, and for some parts of the market, scary developments that are happening that I wanted to touch on today. Try to bring this all together with what we're seeing in the market and a potential future state for the industry. So one of the things I was reflecting on when I was preparing for this talk was, thinking about my own career and realizing that when I started 25 years ago, up till now, I've always been in some way focused on the meaning of money and the evolution of it. So when I started as an FX trader, my very first job back in 1996-97 was involved with, or at the time of something called the Euro convergence, where all of these European currencies were converging into a single and a new common form of money and currency. A grand experiment that at the time we didn't really know would actually pan out. That continued with working in emerging markets and going through many currency crises. And I think, interestingly, when I left that space and in 2013-14, that was the next chapter of a real examination of money that was happening across the globe. And this was really the beginnings of Bitcoin and cryptocurrency crossing the chasm and getting to the public consciousness and making many folks take a second look on what has been the actual history of and evolution of money and payments. And I think, as we'll talk about a little bit today, we continue that work. I continue to find myself maybe a little bit like Forrest Gump accidentally in the nexus of all this innovation, working on central bank digital currency, stable coins, how all this is coming together, how this is evolving. I think it's important to think back, where we started to where we are today. The last 20, 30 years, we've seen an incredible, I think, acceleration in the innovation in the space, the changes in the space. And I think both sides of what's happening here around things moving to more digital on the payment side to the creation of digital assets, whether they're settlement assets or cryptocurrencies or the tokenization of securities. All this is really, I think, putting this evolution of money payments into hyperdrive. But before we go into the future, it'd be good to look at where we are now and maybe think about what are some of the challenges that we're seeing across the payment space. And I think I wanted to tie this more specifically in some of the things I'll be talking about in a little bit around where central banks are focusing their attention and how they can help positively modernize payment systems, both domestically and cross-border. So if you think about some of the pain points within payments, it's clear that there are challenges with costs. There are challenges with transparency, the knowledge for a business to understand what is the status of the payment in flight, to understand what is the ability for them to access certain liquidity for their cash management needs. Also, what is the challenges of access, being able to, on the business side, being able to bring payments into the point of need and have that fit into their actual business needs, into the markets that they're trying to service and the markets they're trying to access. And I think, lastly, going back to this cross-border problem, it's a challenge of access, and it's access within these domestic networks, but it's also a challenge of access and equal access for participants to be able to facilitate and make payments cross-border at the same ease and cost as some of the larger participants. So these are some of the challenges we've seen today. What are some of the things and the areas that people are working on? And I think in particular, if you think about opportunities, as we talk about digital, this is really reflective not only within the payment space, but as we segue into talking about central bank digital currency or regulated digital currency, these are some of the areas that are top of mind for the use cases that are driving the investment into that space. And also, the reason we wanted to talk here a little bit more about retail and wholesale and that convergence together is that this also covers the topic areas that central banks and participants around are really investing their time and effort into. So if you think back to this meaning of money or what the potential for the evolution of money, Bitcoin was really the first example for potentially on the retail side of things to usher in a new world of peer-to-peer payments and transactions. That didn't really pan out on the crypto side, but there are incredible advancements within the digital payment space that are happening outside of the cryptocurrency sphere. If you look across on the wholesale side, a lot of it comes down to risk and cost. How can we eliminate or reduce counterparty risk? How can we get better access to liquidity, especially with high value payments? But what some of the challenges or opportunities that are universal is back to this need for transparency, for the ability to know exactly what is happening with an in-flight payment. Importantly, back to the risk side, and this is something that when we start to think and maybe change our mindset from, say, the public crypto world into the regulated financial market world, finality is such an incredibly important topic, and not just not probabilistic finality, but instant and deterministic finality, and making sure that this is done not only in a secure environment, but in an environment that fits into how businesses operate today. So I've been mentioning some of the experiments and work going on in digital currency and the potential re-examination of money. And I think it's important to note how much activity is happening across the central bank digital currency or the CBDC space. So at R3, I mentioned, starting our journey looking at where Bitcoin and distributed ledgers could impact global financial markets. As early as 2016, we started our work with central banks, with Bank of Canada, Monetary Authority of Singapore, and others. And the pace and the depth of that work has only accelerated and continued over the last 5 years, to the point where now I would argue it is not if, but when central banks will be issuing digital currency. And just as an indication, so as you can tell by my accent, I am American based in New York. I'm currently visiting London. This is a topic that is very, very top of the agenda within the United States. A little bit different than here in the UK or in Europe, where there is still maybe a little disconnect on the opinion on how central bank digital currency could evolve. But if you look at the path of the public sector's comments, experiments, and participation, I do think even in the United States, it's not if but when, and especially within Europe, and we're already starting to see this in China. This is becoming real now. Of course, when you talk about central banks, there will be a certain sort of central bank speed where this will come about. But I think that what we're seeing in the market, the work that we're doing on the retail side, when you look at what is happening at the Riksbank in Sweden, all the way on the wholesale side with some of the work that we've done with Banque de France and Swiss National Bank, the pace is increasing. The understanding of the market is increasing. I guess it's also important to ask, why? What problem are we solving here? We talked a little bit about, the need for a modernization of payment systems. Going back to the settlement side of things, the other side of this coin, to excuse the pun, would be the rise of tokenized or digital assets. We have seen an increased scope for making traditional assets digital across the regulated financial world, and every day we see new examples of outside that regulatory sphere within the crypto and the DeFi world of new and novel digital assets, even in the form of things like non-fungible tokens, NFTs. This is a trend that has started a few years back and is only accelerating as well. So you have these twin trends of the creation of net new digital assets and the tokenization of existing markets, along with, importantly, the other side of this trade into the settlement side for the digital currency. On the digital asset side, to make it a little bit more specific around what we're seeing, what we're working on, and what businesses and especially large financial institutions are focused on. While the focus on crypto and crypto assets is definitely a strong trend, there is also a very, very, very strong groundswell around what does it mean to potentially modernize regulated markets when it comes to things like digital equity and debt instruments. And one example to talk about would be in the debt space. And recently, the EIB in Europe, one of the sovereign institutions, has issued its first ever digital bond, and interestingly on a public blockchain, and they're going to continue that work. And we're seeing across the regulated financial institution space an increased appetite for this type of not just experimentation, but how is it possible to be able to issue really natively digital instruments, allow for the management of those instruments from, in effect, cradle to grave, and to allow for the things like the secondary trading and servicing of those assets. This is an investment that's happening importantly on the public sector side and the private sector side. So we see this increasing and landing into regulated financial market infrastructure. So work that we're doing with folks such as the Swiss exchange SDX and others across the globe. You're starting to see the creation of these potentially digital walled gardens where more and more assets are traded, issued, and settled, and especially in particular settled in a way where it takes advantage of the truly digital nature of these products. So if you start to bring these two concepts together, what does it actually mean? What are the attributes, both from a digital currency perspective and also from a digital asset perspective? So one of the key concepts here is programmability. When the expectation level, I think, is quite important when we start to think about what customers and I think companies are looking for. They're looking for the ability to implement their business more effectively and efficiently in the software that they use. That has not quite gotten into the financial realm just quite yet. Even with the rise of fintechs, the programmability of assets is not something that has been able to be achieved with just the modernization of the existing systems. But with the advent of digital currencies and digital assets, especially when they are all residing on connected networks, such as DLT networks, you start to see the benefit of bringing these assets and currencies together to be able to automate and program the actions across their life cycle. I think it's also important to mention before around finality and what we call atomic settlement. There is an enormous amount of risk of uncertainty when there's an exchange of assets, whether it's a simple payment or an asset being settled and swapped for a payment. One of the key experiments that we have helped participate in is something called Project Helvetia, which is the creation of a regulated digital asset within the SDX environment and the settlement of that asset against central bank money in the account of the Swiss National Bank, where it has reduced the risk involved of everyone. It has achieved an atomic settlement, importantly, into regulated central bank money. I think the other thing that's quite important to think about is taking inspiration from the crypto world. There is a move to a different paradigm of 24/7, not just for open markets, not just for trading, but also for settlement. I mentioned before around this move to open networks and open markets. It's also about open access and different service provision of the ability to reach settlement. So as you think about the creation of these digital assets, I mentioned all the work that the central banks are doing. It is not just within the central banks that we're seeing this work. I think it's important to note the regulated markets are starting to see the increase in the projects related to things like digital currency, otherwise known as stable coins, and the issuance of digital assets. This is a trend that we've seen over the last few years and will only be increasing as both the understanding of these use cases increases, and I think the acceptance from the regulators and the central banks starts to grow and continue. And that is because they have been getting their hands dirty with this. They've been getting involved in these projects. One of the things that has been really the first job that we've had at R3 from the beginning of the company in 2015 that we still do every day is increasing the understanding of what this new technology can bring, especially to financial markets. So what we have done is created what we call our R3 Sandbox, and this is the ability, or it gives the environment for importantly, the public sector and the private sector to come together to understand what it means to create and issue these digital assets and digital currencies. What are some of the ways that they can be transacted? What are the rule sets around which that these transactions can live, and importantly, how these assets can operate within a bounded network. Now, it's been amazing to see the uptake of the work that we're doing. I mentioned starting back in 2016 on our first central bank digital currency projects, continuing into last year where we had our central bank digital currency working group that had over 100 participants across the public sector and the private sector, continuing into their participation in the R3 Sandbox, which directly includes central banks, large commercial banks, payment service providers, and others. So this is something that makes things real to people. We're moving beyond the project stage and moving into the implementation. So it's a little bit of a whistle-stop tour around what we're seeing in the market and what the trends are. And I would see, if you'd like to learn more, I'd love to invite you to a talk a little bit later today, where the team will be walking you through the R3 Sandbox for digital currency, and give you a little bit of a flavor of the work that has taken place over the last 4 to 5 years, give you a flavor of what are the capabilities that aren't promised for tomorrow, but that are available today, and also a real live example of the requirements and the input that we've been receiving from central banks and others around the globe to try and make this real, to try and bring together this really the evolution of money and markets into something that fits into the existing world, which is really important to do, but also really takes advantage of the novel sort of promise of this technology. Because if you really bring it back down to what distributed ledgers are, it really is turning things around and democratizing new markets. It's allowing for participants to really regain control of their assets, regain control of how they participate, and we hope and we think that it will expand markets, not just for incumbents, but also more and more for small and medium-sized businesses, all the way to the customer's customer, to the retail side as well. So thank you very much for your time, and enjoy the rest of the sessions today.